Awesome. What's going on, guys? This is Cooper here talking to you about DeFi governance today. We've got some experts in the space here, all working on different sectors, and we want to try and focus on what is governance in DeFi right now, why does it matter, and sort of hear about the ways different projects are approaching it. So I've got Gary from MetaCartel Dex right here, Peter from MetaCartel Ventures, and Anna from Akropolis. So to start out, guys, I would love if you can get maybe a 60-second introduction to the project that you're working on, and then from there we can dive into the governance with each of them. So Gary, would you like to start?
Sure, that works. Hey guys, I'm Gareth. I'm head of business development for MCDEX. MCDEX is a decentralized exchange for trading perpetuals. So you can think of perpetuals as leverage contracts without any expirations. We're the first platform to release decentralized DeFi, and we recently added link perp to our offering. And so our goal, the final goal for the platform, is to actually become more of a DAO, to actually get our token users to make decisions on the platform. So we released the MCD token a month ago, and the idea is to add a bootstrap utility to the token and give a greater ownership to our token holders.
Peter, you want to go next?
Sure. Hi, I'm Peter. I was, I guess, I spent most of last year organizing 50-person DAOs. Now you have like all these large-scale DAOs, and I guess, just spent all of 2019 doing that. Was mostly known for being the first person being rejected from Moloch DAO, from joining, and then became the first person to fork it, and help. And I guess if you've seen a dancing chili around the community, help make that happen, perhaps, and also help launch like the first kind of like, venture investment DAO on Ethereum.
With a pretty strong focus on DeFi so far, right? Like in terms of where mostly investments have been directed?
Yeah, a lot of DeFi, also doing some NFT stuff.
Nice. And Anna?
Hi, my name is Anna. So our project focuses on synthetic savings and high yield accounts. That's from our Delphi project. We also have Sparta, which we're rolling out a little bit later. The focus is on under-collateralized lending. The original story was the intention to build a distributed pension fund, and we ultimately moved into crypto-native synthetic sources of yield and credit.
Awesome.
Yeah, so launching at the end of this month.
Awesome. So yeah, I know for both MCDEX and for Delphi, your new product, there's some interesting liquidity mining seedings going on here. And I would love for you guys to just very briefly talk about the way that you're approaching token distribution and sort of what you've learned from, what we've seen in the wider DeFi ecosystem and how you applied those to the models you're using to distribute your tokens to the community.
Sure. Yeah, I can start if you don't mind. So we started building a product probably about the same time as Andrew started and it was very interesting to see how the how the Wi-Fi experiment unfolded. So it's clear to us that for a viable product that's reasonably feature complete, right, and doesn't require a lot of ongoing development, it's entirely credible to issue a, let's say, essentially a work token, that's what it is, right? And in our case, since Delphi wasn't on our roadmap, it was very much something that we built for ourselves and for our friends internally, just to ease the pain of yield farming and exploiting opportunities in the market. We've been selected into Idea Caller Product Validation Day, and prior to that, the team won a Hack Money Hackathon, with a similar product. And we just got so much positive feedback because it was something that's very simple, something that got, immediate feedback from the community. And we really just rolled with what people have been asking us to build. And if it hasn't been for 4 or 5 initial community members that were literally, pestering us to do that, I'm sure Delphi wouldn't be here now. So it's only fair. Like when we saw the validation of of basically a giveaway work token, which is what Andre has done, it was like, okay, let's think through whether it would make sense for us because we already have a token. right? So we had a different scenario. So you don't want it to be seen, as a money grab, but it's very important for a project that has legacy, has, let's say, 50% plus in circulating supply. How do you incentivize the new people that are very different from the people that have purchased the token in 2018? How do you incentivize them in such a way that both groups of token holders derive benefit, but ultimately the focus is on active users? And this is the problem that we've been solving with our incentive design.
Awesome. Yeah, and I guess just to quickly add a quick word there. So Akropolis has built Delphi, which is a consumer savings product. It's for yield aggregation, and they're launching a new token, ADAO, which is separate from the protocol token, specifically on governance of that product. What I really liked about the way you guys are doing it, as Anna mentioned, it's going to be fair launch. You can only earn the token through yield farming in the application, and then that entire focus of that token is around governance of specifically the Delphi product, which is really fascinating.
Yeah.
So going over to Gareth, yeah, I know you guys have been getting a lot of love from the community for your liquidity mining distribution. Could you talk to me a little bit about how that came about and sort of why that seemed like a good fit given the climate of the market?
Yeah, sure. So for us, we have this hybrid model for exchange. So we have both the order book for traders who are familiar with BitMEX or other perpetual contract platform, but we also have AMM. And so we're AMM, what we're really trying to build is this on-chain liquidity, money Legos that developers and other entrepreneurs can build on top of. But what matters to us is to build as much liquidity on top of it. So how do we incentivize users and community members to actually participate and get involved? And so I think, yes, at first it's a bit of a Ponzi-nomic where you just try to get people by the APY or the yield, but I think what tends to happen is people kind of come for the yield, but stick around because they get more familiar with the protocol. They start to understand some of the purpose of the platform. So for us, it just made sense to have that token to incentivize or users to participate and to provide liquidity. And so we think for the MCB is for it to become this governance token, where for now we're just a reward, but eventually we can add more utilities. And it just makes sense for when you think about a platform for users to be able to decide like things like trading fees or what token should be listed or unlisted. So the greater control they have, the more involved they have, the more involved they are, the stronger the community becomes, and I think the more valuable the project becomes.
Mm-hmm. Peter, looking at projects from an investment standpoint, how do you guys view liquidity mining? Is it something that is more attractive as an early stage investment, or is it something that sort of adds a question mark that it's unseen whether or not it's an effective model yet?
I'll speak for myself. When I look at investments right now, it's really like, will this team keep building throughout the next bear market? If not, they're going to die and you can lose your money. I think, most teams, I think the thing is, it's like, how do you create ownership? And that's, not by throwing money at people. I think like Wifey's, Wifey is pretty interesting because behind the scenes, there's like people building a real organization around Andre. Go on, the top DeFi protocols, go to the firms, and you'll see a grim representation of what DAO kind of looks like for those projects, right? Not to throw shade, but it's very hard to create ownership. It's tough. And, I think that's what sticks, like after a lot of the hype and, when the money stops going up, like people are just going to dump and defect, right? And, why are people not going to defect in this, like, in your token economy, right? I think there's like, the truth is like the answer to a lot of these questions of how do you create ownership, there's not a lot of fancy answers to it. It's just like relationship building. It's, building the right things, listening to your users. You can't really, it's bread and butter, honestly, right? It's only gonna get harder, about this like incoming kind of bull cycle, I think, with like so much more noise, right?
Mm-hmm.
So TLDR, it's cool, it's a tool, use it at will, right? It can bootstrap, a user base, but what you do after then, you have an audience, matters a lot more.
Yeah, and it's really interesting. Before the panel started, we were talking about how liquidity mining and governance are very tied together. From my perspective, I think that the vast majority of governance discussions are around token distribution. And to Peter's point, I think the reason that is because there's returns to be earned. People are financially incentivized to make sure that works out well. But, you know, it's unclear if that's really going to be sustainable.
I kind of don't like the mental model of liquidity mining. I kind of see it as more like a reallocation of your tokens network to the right people. I think that, you know, like the idea about like DAO governance is like the kind of superpowers, right? It's like having, you know, company can only have X amount of board seats, right? Like 12 or something, right? It's usually limited, like, you know, it's not a large number, but it's like, you know, tokens, you can have like thousands of board members, you know, who can help and add value. You know, every set of tokens like on an exchange or a Uniswap is like opportunity cost, right? In a way, like, go on, Anna.
I think you're on mute.
Yes. Yeah, from what you were saying, Peter, it actually, you can compare governance tokens with sort of, you know, perpetual shareholder activism,
right,
on chain, right? Because and kind of perpetual reallocation of that. Obviously, the methodology behind reallocation is always problematic, right? Because this is what we've seen, you know, in MCV and in other DAOs, where okay, how do you actually assign and reallocate value to people that perhaps contribute really valuable skill sets and time, but not necessarily capital, right? So this is always subjective, but yeah, to me, it's almost like perpetual shareholder activism.
Mm-hmm.
I like that.
Yeah, I'd be curious. Go ahead.
Yeah, I'm just going to say that to me, yes, I think there's this question of sustainability around the model of liquidity mining. I don't mind that at the beginning it's a lot of speculation because it's almost like rewarding the risk taking. It's like you're taking a big risk. There's so many platforms around you, and it's just everything's happening so fast that I think it's impossible for someone to have done the due research on every single platform. So there's always a little bit of a risk in terms of opportunity cost, at least because you're taking your tokens in one direction and not on the platform. But then I think the goal would be that eventually that risk is removed because you actually had time to look at the space and how it grows. And then to Anna's point, I think eventually it becomes more of a community token where you take ownership of the platform. So all the craziness is, yes, I think there's a lot of things that probably are a bit suspicious, but I think it's healthy.
Yeah. Ultimately, I mean, when PayPal started out, they were paying people to use PayPal, right? You know, there's nothing inherently dirty about it's customer acquisition cost, right? So liquidity mining isn't new. It's not some, you know, sort of exotic concept. You're paying people to single out your product from a lineup of competing products, right? You're competing for attention. And right now, everything competes for attention, from devices to products to service providers, right? Now, of course, if your product doesn't solve a problem, if it doesn't deliver value, the whole thing is just gonna nosedive for sure. Mm-hmm. But if it does serve a purpose, it's a useful bootstrapping mechanism, right? But not indefinitely, for sure not. Just for a period of time. You know, when you need that initial, you know, attention grab, and then, you know, it's like with the job interview, right? You may get an intro, but it's up to you to convert it, right? So it's the same, you know, except for you just getting the users in.
Yeah, that is interesting.
Sometimes less is more, right? Like if you're gonna like, you know, it's not more Vegemite, it's just enough Vegemite, right? You know, I guess it's like, yeah, like you create, I think like you want to attract the right audience and user base, right? And if you kind of create something like kind of too far-fetched, you might just attract a bunch of pasta bros over to your protocol, and then, you know, that just recycle it. So it's like kind of, I guess, you know, you always have to frame it as like engagement and usage of the platform is also an investment from the user standpoint, right?
It is, of course. It's the time, money, opportunity cost.
Yeah, it's really interesting when we think about, you know, the point of a fair launch. And I think that now with sort of all the food coins, we're seeing the fair launch is the value of the project, whereas others are trying to use it as a means to sort of bootstrap their project. And I'm curious to hear people's takes on, you know, is having a fair distribution through liquidity mining enough to make a project sustainable in the long term? Or do we think that it's going to be this short blip where people will farm something, you know, it'll be distributed fairly, and then the project will just go to shit because there's no reason to stick around after you earn the yield from it.
I tend to lean on the latter side, I think. But I mean, let's define what's fair. 100% is very memeable, right? It's great. And it's because it's memeable, it also means it will be inherently short-lived. I mean, you know, I may be wrong. This is my read of the situation, but ultimately, let's say the route that we took is that, you know, you need to have an allocation for audits, and you need to have allocation for product maintainers. It's not, you know, it's not a large allocation. It's sub 5%, but you know, it's necessary. You don't need you know, a separate vote on that, because frankly, the machine needs to run, right? And if it's a fixed supply, fine. You know, through governance, you can decide on, you know, some moderate reasonable inflation. That's up to the community. But I think the basics like security, basic technical maintenance, and some core OPEX, which is what we're seeing with Wi-Fi right now, is entirely reasonable.
Well, you know, it's, yeah, I mean, on one hand, I guess I would also put that like fairness does not mean a lack of value capture. You know, there's also so many different ways Andre himself can value capture the, you know, from working on Wi-Fi, right? Just like being paid by the community, right? It's kind of like the interesting question now. It's like, you know, obviously the question, you know, Wi-Fi is just like, it created a precedent where it's like, you know, can people get rich, you know, while working on highly speculative and, you know, kind of lucrative, like kind of yield experiments while, you know, kind of creating fair launches, right? And it's kind of, I'd be interested in seeing like the outcome of like Wi-Fi and I guess the organization they're building around within the community, right?
Yeah, I think, go ahead, man.
I'd like to say that I think in the short term, this concept of fairness matters technically and psychologically, right? As you want to invest into a project, you don't necessarily want to buy somebody else's bags. And so you don't want to be the late comer, right? So the early people seem to have an inherent advantage. And so it might feel unfair for people that come afterwards, right? But I think it's more psychological than technical. But yeah, I'd say in the long term, it matters less because then the value of the project, the actual utility of the platform is what matters to more long-term investors.
Yeah, and I really love that notion of if you're one of the first people into a project and performing a value-added action, you get rewarded, you know, because of that. You know, you get more rewards for being there on day one than you did someone who joins on day 365. What I'm concerned about is the fact that these distributions are so short-lived that the entirety of the supplies are over a week or something like that, that time period is solely made for the people who are on DeFi Twitter every day today. You know, like if you miss out by an hour, you miss on 1,000% APY. You know, and it seems like to some degree we're sort of incentivizing people to just take on a shit ton of risk because they're getting rewarded for taking on that risk way more than someone who's sort of being cautious and trying to do diligence and check the contracts and make sure that they're secure before they just YOLO all their money in.
Yeah, it also becomes clear that it's an information asymmetry game for insiders, which is fine, but it doesn't help to attract new capital into this ecosystem. And what you get as a result is constant recycling and, you know, double counting, and then people, you know, getting excited about, you know, DeFi TVL, but a lot of those dollars, the double counted dollars, are not treble counted in some cases, right? So, yeah, it's just, you know, I think the concept of fair, because 100% is so memeable, people tend to, let's say, overlook the fact that, fine, what was, you know, as you rightly pointed out, what was the information asymmetry, what was that arbitrage, which very few had, but arguably doesn't make that a fair distribution, right? And that's fine. All I'm saying is just, let's just not get blinded by...
It's a meme, you know,
yeah,
it's like
meme, because it's just that. That's it.
Yeah. It's a lot of psyops, right? Like, you know, it's great and I love it, you know, and I would say it's definitely really cool to see like a fairer distribution, right? And then with a lot of the token stuff we've seen, but it's, you know, not absolutely fair. And, you know, there's always narratives at play, you know, whatever you think, you know, it's like there's always someone with a bag pushing a narrative.
Totally.
Right.
Yeah, but to be fair, I mean, there's this ideal of a perfectly fair distribution, almost like
Doesn't exist.
immaculate.
It's a unicorn.
Of course.
Yeah, it's a unicorn. It doesn't exist. Really.
But also, unless there are people that to incentivize to very actively drive this forward, which you have this amazing community, very high quality contributors with Waifu. If those people had the same incentives as people that came in, let's say, well, with Waifu, you can't even think in months. But let's say that, 2 weeks later, they wouldn't have the same driver. Absolutely not. Right. So I think it's a bit of a fallacy, right? If you want something that is perfectly distributed with no information arbitrage, it's an on-chain cooperative, right? With the distribution of let's say perfectly linear distribution of rewards, or whichever way it's designed, and there'll be no excitement. There'll be no look at the caliber of people that got involved with Waifu, right? If there hadn't been a massive information arbitrage, which translated into rewards, that simply wouldn't have happened. I think we all understand that.
Arguably, and you could probably engineer these asymmetricities, on purpose, right? It's like if you want a bunch of Harry Potter, fans to be your core contributors, you want to get them rich, right? Leak it to Harry Potter, Pottermore forums, right? And then be like, look, Harry Potter coin, right? It's deflationary, whatever. You stake some, whatever potion, right? It's but yeah, you can definitely engineer this stuff, right?
I think, taking a step back, I'm definitely interested to hear people's opinions on the sentiment of DeFi. And, maybe taking a step back from all of us working in it every day, it seems like there's been a shift in narrative from, for a while, DeFi was really the new sector that was building cutting edge products, focused on sustainability and sort of all this thing that ICOs weren't. And now it's quickly turned into yield chasing, right? And DeFi is yield, DeFi is making more money. How do we sort of get back to that conversation where we're promoting the things that we want crypto to become, and not just being this get rich quick scheme that everyone sort of bashes on crypto for a long time, and really always has?
Yeah, I think it's the spectrum, right? You gradually see a lot of projects kind of focusing on yield, and then originally, as you were saying, people were more focused on the money Lego part, building the infrastructure. I think it just comes to be a timetable for users. As more users spend more time in DeFi, I think the hype kind of dies down. It's almost like there's a lot of noise, but eventually the signal reappears because the value's there, right? People are actually building things, they're integrating, and the value, I think, there's so much things going on that distract you that it takes time. I work in DeFi, but I don't have time to pay attention to everything that's happening. So it almost feels like being in DeFi right now is a full-time job research of know what's going on. But eventually, some people, influencers, start to have more of influence, and it tends to be, in my opinion, people that actually have real value to give to other people. And eventually, same thing happens with project that actually have real value tend to start to rise to the cream. So I hope it's a natural process.
Right? DeFi is gonna be the next dirtiest word in crypto, alongside DAOs. Yeah, it's gonna get worse. Remember, and everyone's kind of dumping on ICOs. I did for sure. I entered the top, of 2017, and I was I saw this space, and I didn't get in on these token sales at all. I just got dumped on. ICOs suck. Yeah. And then here I am buying shit coins and hyping up YT and all this stuff. Yeah, I know it's the fallacy of late to the party, right? But I think there's gonna be definitely I think the same counter sentiment later on when things go wrong. It's just gonna be a very dirty word. Just tip for people building their narratives entirely around DeFi right now, completely. Just food for thought.
Yeah, I think that's why actually I think DC Investor on Twitter said the other day, which I agree with entirely, that exactly because it's an open ecosystem. As soon as money flows to to one particular meme, one particular subject matter, you've got scams just mushrooming around it. That, I guess, different level of disclosures. I think communication, essentially, token holder relations is going to be a lot more important.
Mm-hmm.
Because it's an incredibly information intensive field to operate in, and I think guys like Messari and Zangle and a few others could probably do. I mean, I'm sure that they could do a very good job in specifically rating or categorizing DeFi projects. Right?
Mm-hmm.
I think that definitely needs to be done. For sure. Yeah, I mean, the problem of education, of comms, right, and disclosure really hasn't gone away, right? It's just a new cycle, and we're just having to communicate new issues. The fact that, for example, the way that APYs are calculated in DeFi in most cases is complete rubbish, right?
Mm-hmm.
And frankly, the concept of APY it's massively misleading, right? People still think in gross return rather than net return, and then they go, on Twitter being all unhappy that they didn't get the number that they saw on the screen because, surprise, surprise, there are costs to the transaction, right? So in finance, this is incredibly basic stuff. But here, yeah, and obviously nobody reads disclosures. Nobody reads, if you have a risk warning, but underneath you have 1,000%, right? It's clear what choices people are gonna make. Like they're just gonna, it's gonna be sort of voluntary, blindness, right? So.
And actually say like the risk disclosures, people like those because if something has a big risk warning, that means that you're going to make more money off of it. So people are like looking for places that are having all these red flags because that's like where you're getting rewarded the most to do something, which is very interesting place we've reached. Projects are intentionally going to market with no audits because it speaks to that narrative. And, people get excited that they're going to be in the riskiest thing possible, and high risk equals high reward. So yeah, it's interesting to think about where the line is for that. I want to quickly just take a step back and go back to this governance discussion. I think that everyone's talking about yield farming, chasing yield. Within that, I think that there are still actors that are still, grounded in sanity, right? They're not just chasing yield all the time, even though it is inevitable it's somewhere. How are you guys building out your governance solutions to speak to those core contributors and core community members who actually care about the governance of your platforms? And sort of what do those discussions look like? More specifically as a question, what do you hope for your individual platforms that people are governing, and how are you trying to incentivize or encourage those discussions to happen?
I can just quickly take this. In our case, it's just time lock, rewards time lock. That's it. It's a simple, years old experiment that was actually first run on children, that kids in the kindergarten that could defer immediate gratification, did much better at school and university, and then later in life, right? It's exactly the same here, right? It's deferral of immediate gratification. This is it. There's no rocket science to it. In our case, it's simply the ratio rewards increases as a function of time lock. This is it.
And for that discussion specifically, you're talking about token holders being able to help establish those parameters and sort of be more active in the conversation around what those time lock rewards are and basically like how they're shaped, or help me understand that better.
Yeah, so we actually, so we arrived at that with an initial group of very active contributors. And that will be the default setting, and then people can flex it. Right? But the bottom line is if you can dump a reward, you absolutely will do it. Or obviously, entire products have been built on that premise, right? And there's no point to even be building a product if you have zero moat and you entirely at a whim of incredibly fickle whales, because the bulk of the liquidity is dominated by a fairly small number of people, and we'll probably know at least half of them, right?
Mm-hmm.
So the only way to create essentially an on-chain business and make it reasonably sustainable, right, is, yes, it's in your interest to make sure your distribution is as granular as possible, right? Obviously with some exceptions. It's in your interest to make sure that the rewards play against it, the desire for immediate gratification, because otherwise you will be used and the capital is going to move to the next, whatever, pasta based, whatever it is, right?
Mm-hmm.
Because nobody cares, right? And but if you're doing that, then you have to appeal to people that aren't aggressively farming yield in a very sophisticated fashion, but people that are perhaps reasonably new to the ecosystem.
Yep.
That certainly can't do it on a smart level contract. They need some hand-holding, possibly something unthinkable for a DAO, a customer service, right? Stuff like this, right? And that becomes your moat, right? Because frankly, like, could I have my mom or my brother use a product easily right now? Yeah, well, it's a little bit of training, yes. But would the same apply for other products where the yields are a lot more aggressive? No. Like, you need a few days just to get up to speed, just to repeat blindly what people have to do, right?
Mm-hmm. Yeah, I think passing that over to Gareth, MCB and perpetual contracts are something that's pretty complicated for the average trader. I imagine that governance of perpetual contracts, especially in a permissionless fashion, are very specialized discussions to have. Who are the people that you guys are targeting for governance, and how are you speaking to them about what you want them to be governing and voting on?
Yeah, so we had our first governance meeting, I think, about a month ago, and that was soon after we released the MCB token. So we definitely got like this wave of hype that came from the release of the token, and so I think there was like a toggle between two different sides in our community that wanted to the next point to think about the vesting schedule, like how to actually incentivize people to stick around and to have a greater long-term vision for the project. But the other side was not necessarily, I mean, I could map it and say, well, those are just people that are speaking, because the other side was to say, well, how do you provide liquidity on decentralized platform? Because that would actually improve the adoption by having greater volume. So I think there's different considerations. I'm a bit biased towards like a vesting schedule, and I think that's something that we're looking into. But yeah, for us, yes, it's hard because our platform is not necessarily like the easiest UI in terms of getting people to become liquidity providers or to just be involved in the platform in general. So the consideration there is that how do we get those different actors in our community to have the same aligned interest, right? And so that's where the decision around the community governance comes into place, right? So all this proposals that we have in our voting system is really about aligning the interests of different actors, and that's a balancing act, and that requires listening to our community to hear what they're thinking about.
Absolutely. I think, Peter, you've probably seen more governance proposals than anyone. Who's doing governance best in DeFi right now?
Yeah, not a lot of projects, but probably, I think Nexus Mutual is really interesting. I think, they've got a really nice balance. Wi-Fi is a bit too chaotic. There's just a lot of noise. The trouble with like Wi-Fi is that the community grew too quickly. And not saying it's like past the point of return, but there's a lot of like social infrastructure that they need to implement first to kind of get organized, and it's going to take longer. Nexus Mutual, they had the right time to just stay small, set up like the norms and processes, right? And I think it's doing really well. They have really sophisticated people who understand policy and product, and they were even willing to like bleed themselves out, just like lower the MCR, right, to kind of grow more, right? And that's like obviously worked out nicely for them, and yeah, so I think they're doing it well. Protocols are probably just going to pay people like part-time wages to like participate and give users the option to delegate. like, you know, then not a lot of protocols are doing this right now because numbers are going up and it seems easy, right? Nothing's going wrong, nothing's breaking, but like, yeah, this is probably what's going to happen like a year or two out, or like even sooner, right?
I think sooner. Yeah, I think sooner. I mean,
Yeah,
it's work.
like probably.
You know, it's work, and it's fairly.
Yeah,
not,
you know,
not everybody can do it.
I think it's just going to be like extension of open source software and like plus governance. It's like, hey, you know, these are contribution guidelines, you know, contribute. This is our calls, you know, turn up if you want to. These are some initial tasks you can do. Go do them, right? Like maybe it's like summarize our token, blah, 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 you know, like write a blog post about this, like get acquainted, right? This is our social like architecture, right? Yeah, pretty standard stuff, right? Just something new.
Yeah, it is interesting that we don't pay people for governance so far and that we expect them to do it for free. I think, you know, everyone kind of expects that there's going to come a time where people are paid to do governance, but we've yet to see it like very clear cut. It's definitely not fun. Yeah,
it's not fun reading like endless blog posts and like what the hell is going on, catching up, right? Like, you know, yeah, I spend my Sundays just going through all the DeFi forums, just reading stuff. And like I get half of it and like I skim through the kind of the more like protocol specific stuff, but just like, yeah, it's a lot of work. It needs to be paid.
Do you think do you see it being more wide set where basically politicians are governing multiple projects at once, or do you see it being more specialized where there's specific people that are just really, really into one or two projects and they just completely disregard what's happening in other places in the ecosystem?
Mix of both is my guess. I don't see why it would like heavily lean towards one or another. Probably going to be some professional, like I think of it like it's kind of like stakers, right? I don't know, like staking and validated. Like it's like, you know, they're kind of like node network. They have to operate the node. There's like DevOps, you know, something breaks, you know, get slashed if you don't like, you know, kind of maintain the node. You know, there's in a way like there's like same running like maintenance costs, right? And you have to like keep up to date, update node, you know, and such, right? And you can take delegations to make money. Take fees off that, you know, just like how we can delegate, say, governance, right? Yeah.
I hope, I'm optimistic that governance doesn't just become people automatically voting yes or no on something. You know, I've seen it in Kyber where there's a project called X tokens. You can basically delegate your tokens and it always votes for the proposal that has the highest rewards to KNC holders. And the one thing that I'm wary of is, you know, if we incentivize governance, it's just going to be people voting to vote on what pays them the most. Yeah, and like, how do we build systems where people who are contributing actively to the forums, who are actually sort of, you know, being really engaged in those conversations can benefit more so than someone who just has a shit ton of capital and just is auto pressing yes every time.
This is probably where it comes to robust governance. It's like, you know, if you want to, you know, if you want diverse no governance is going to be like, there's no such thing as like fair governance, right? It's only kind of like, I only believe there's like diversity and kind of the outcomes that, you know, it creates. So like, yeah, like, you know, if like Polkadot maxis are like attacking like a protocol, you probably want to have some ETH maxis contracted, right? Like, you know, as politicians kind of come on board and, you know, counter the psyops, right? It's probably going to happen. Yeah, like, you know, there's like, you know, I'm yet to catch up on the Wi-Fi and like the the compound like kind of voting weighting for like curve. I'm yet to catch up on that, but it's like that seems interesting, right? Because it's like you have these conflicts of interests which are like completely unavoidable, and that's where the fun starts. You know, maybe someone else deploys like another Ponzi scheme to then like collect TVL for like, you know, curve token voting, right? Like, and then like that's like a counter against that, you know.
Totally. I think to just give people who are listening some context, so right now in Curve, basically people can use their tokens to vote on which pool gets the most rewards. And this week we saw Compound basically, someone in that community buy up a shit ton of tokens, boost the weight of the Compound pool so that it got the most rewards. So now everyone, like these Wi-Fi people, you know, these Anons are...
It's like Robert, just Robert trolling Curve, you know, like...
Totally. And I think the interesting thing there is it's the first governance token we've seen where people like want to have their own stake in it because it benefits their community's best interest. You know, it's not just an asset or something like that. Like you literally get direct benefits from purchasing that token and using it to influence your project's pool or best interest. And I think it's a really fascinating thing we've never seen before in DeFi.
Wi-Fi folks are getting riled up. they're like unhinged. They're like not happy with it.
But it's good, right? It actually inquires participation. I mean, to your point earlier, Peter, people are just defecting. They're getting tokens and dumping them. This is like one use case where people actually want to acquire.
There's enough value there. There's enough value there in the governance, right? It's like, it's why like, big companies pay millions of dollars, taking politicians to dinner, right? And like, lobbying. It's just like, it's to get policies across that, benefits them. Yeah.
Really interesting. I love this narrative of like governance is valuable. I don't think that we've done a great job of communicating that in sort of the wider crypto industry. Governance is a buzzword, but I don't think that we've properly shown people the value it has.
In crypto, we have advisor tokens in like the real world. There's something similar to that, where like big oil companies give like money to like politicians, like kind of, and under the table kind of matters. Right. Offer them comfy jobs once they leave, like, it's kind of even like ex-regulators, right? Like they get comfy positions because they just know how to operate, the system.
Makes sense. I guess I'm curious to hear, Gareth, for MCB and the way that you guys distributed your tokens with governance, is there any sort of key partners that you guys are reaching out to sort of participate in these discussions, or how are you bootstrapping the governance discussions in the first place?
Yeah, for us, it's mostly community driven. So we reach out to our community on Telegram, on Discord, on Twitter as well. We've had some organic partners just come up to us because we have natural synergies in terms of how they want to build different experiences on top of our smart contracts. So we're reaching out to them as well to get some direction. But I want to piggyback on what Peter was saying. I think it's tough because from my experience, the earlier DAO experiences were hard because there wasn't any stake in it, right? So you make a decision for some treasury where there's like $50 at stake, and no one's really cares about that. And so then you end up with those decisions that are not reflective of the community because only like less than 1% actually participated in that. So it's almost like maybe a necessary evil to incentivize those decisions happening. But yeah, it creates those weird incentive rules or mechanism around the decision process.
Absolutely. I think, passing back over to Anna here, I really love the way that you guys are doing ADL distribution and sort of capping who can get involved. Could you talk a little bit about sort of the lottery process you guys are using and how you're seeing people respond and care about participation because there is this gamified element to it?
Yeah, sure. It was very important for us to make it as fair as possible so that you don't have information asymmetry, which we talked about before, right? So, we just used a further robust lottery bot that's used by Discord. So something that is recognized to be provably random and impartial, right? And we just use it to allocate tickets to the capped mainnet launch. And what we're doing that's also different, certainly goes against the spirit of chasing yield right now, is we're really following Candida's from Electric Capital controlled mainnet launch sort of paradigm. So the caps are going to be essentially lifted in several stages until we go entirely uncapped. That will help us to make sure that distribution is as granular as possible, right? The early guys that have been involved from idea call-up validation day are clearly benefiting because they were the first very meaningful, very material contributors to the product. But essentially what we analyzed multiple approaches and we decided against anything that's overly complex or heavily over-engineered, simply because this is really as close to growth hacking as you get in product development, right? So we decided to take it really on a weekly basis. We're going to be reviewing what works, what doesn't work, obviously taking metrics along the way, right? But the important piece is that the path towards full uncapped mainnet is going to be in several stages. That the caps are going to be lifted, and we'll be making sure that we have, as many different participants in as granular distribution as possible.
Mm-hmm.
Yeah,
I think that's the hard part, because you have people that contribute, but it's not necessarily reflecting how many tokens they have, right? So I know some projects have introduced this concept of reputation and to kind of use that
sure.
as a better way.
Yeah, I mean, so in our case, it wasn't strictly speaking necessary, because again, we go back, so we have some history, which means the following: that we have a reasonably good grasp on our token holder universe, right? And we don't have any, let's say, dead legacy wallets, right? For a number of reasons that are specific to our project, they're all alive and actively engaged, right? So this is why for us it was actually a perfectly acceptable shortcut, right? But I agree with you. If let's say if we had let's say 20-30% of wallets that had zero related activity in the last even 60 days, I would have taken probably a different approach. So we're heavy users of Nansen. Shout out to Alex, and super helpful too. So really, it was the on-chain data analytics specific to our token use that really drove both our design and also decisions whether to go simple or complex, and what approaches to adopt.
Definitely. I want to use this last 10 minutes to sort of get into more controversial topics here. I know before we started the panel, Peter and I were talking about food coins and whether or not they actually add any value to the ecosystem. I'm of team screw food coins now. I definitely was pretty into them for the first 48 hours, but now I think it's just kind of like a cancer.
You love the yam, did you?
I want to open it up and see like what everyone else thinks.
I was skeptical about the yam initially, simply because it's very clear arbitrage of people that can do the math versus people that can't do the math, and that can accommodate reasonably. It's not even a complex abstract concept like rebalancing, but most people would struggle with it. But what I find really interesting is it's a great experiment that actually, but there's always a fine line, right? How far do we have to go where a Ponzi-like structure you can continue calling it an experiment and getting away with it, right? And I think there've been quite a few projects since that perhaps have crossed that line. Personally, for me, right? But with the YAM, I thought YAM was interesting, precisely because you just realize, especially watching the chat rooms, you realize how, on what basis people make decisions, right? And how reasonably simple mathematical concepts can actually represent a massive challenge. And then obviously what you get is a wealth transfer. And this is what I personally am uncomfortable about. You get the wealth transfer from people that, to put it, in the very blunt terms, perhaps not as sophisticated, and can't easily think in the sort of elastic supply concepts, right? Mentally, and the ones that who can, and obviously the latter ones are in the minority, right? So it's a casino where the house wins, unquestionably.
Right. I'm waiting for the day where I can go on Zapify or Ethereal and just see pastas, pizza, ice cream, and all my favorite food. But I think, yeah, as I say, it's a lot of experimentations. in theory, it makes the space anti-fragile. So the more experimentation, I would say, the better. But it's confusing for me and for a lot of users. But it's all the experiments, as long as there's something valuable in each one of them, they actually add something to the space. The issue to me is when there's just copy pastas, and copy paste, and there's just a few change in configuration, and there's nothing more to it. As long as there's like a desire to look at a different rule, it could be burning, it could be a different distribution mechanism, or even as Peter was saying previously, recall like some kind of gambling mechanism, randomly send tokens to addresses. It's maybe on the surface it could be trivial, but I think even then we can learn something from it. So
definitely.
I kind of feel bad for everyone who like is already disappointed about DeFi and all these food coins, because it's like it's just gonna get like 100. It's gonna get 100 times worse. People, we haven't even like started becoming really creative. Like the crazy people think like forking Compound and adding more assets is like wild, like, so like just hold on for a sec, might make you cry.
What is our role in that though? I think that there's a fine line between like letting those experiments happening and encouraging people to participate in them. And I definitely think that it's fun, right? Like going in and putting your money in and getting 20,000% APR because you're the first one in. That's obviously very fun and gratifying. But where's the line turn where you sit out? You don't participate in these things because you recognize you're just kind of encouraging something that just is causing people to lose sleep and just staring at their screen all day to farm magic internet coins. Like what does that line look like? Or should there even be one, I guess?
I mean, if you paint it in this picture, it's like, oh, a bunch of people playing degens flipping shit coins, but then like, isn't that just like the public market anyway?
Yeah.
There was a comment on Twitter where it's like, is this what, during the height of the yams thing, it's like, is this what like how Wall Streeters feel? During the day-to-day? Not really.
Wall Street is a lot slower.
You would know. Yeah. Okay. It's worse than Wall Street. Wow. Okay. We heard it today from Anna. DeFi is worse than Wall Street.
It's not. It's definitely worse. But okay. So here's the thing. To me, the biggest question mark is, where do we draw the line between an experiment that's unquestionably intellectually stimulating and fun, and just abandon the gen multi-level marketing style, right? Because it's not just people losing sleep, it's people losing money, right? Right. And you mentioned how gratifying it is to make whatever 7-digit return percentage terms. Let's talk about how ungratifying it is to be wiped out, right?
Only the strong survive. That's what people say.
Shout out to the YAM liquidity providers.
I know. And this is the ecosystem that, where like one of the leading narratives was bringing DeFi to the masses, right? And all this tired, banking the unbanked. I mean, like, what's happening now is just is pretty terrible. Right.
It's something, all right.
So I mean, like, this is exactly what this sort of experiments is exactly what gave rise to regulation with respect to retail investors. This is just like, there's no, like, there are no two ways about it. Okay, sorry. So it's definitely a massively gray area for sure, and in many cases it's on the wrong side of the gray. To Peter's point, is it gonna get worse? I'm sure it will, because the gens are gonna degen.
Totally.
One thing that surprised me in the space is that this idea that you can actually release something without any audit, that was surprising to me, that the space was able to accept it. Because I felt like that was like one of those best practices that was almost
I agree. Or
culture. I've heard the case be made that, okay, well, if you use a money Lego that's already been audited, you're not adding a lot of code, then you can kind of bypass it and use some heuristics around it. But I think there's a real danger indeed in losing money, but also in losing some of the cultural knowledge that we've gained over the years.
Mm-hmm, mm-hmm. Yeah, and I really liked your
No,
take where you were talking about
you're
going
too
on like with
reasonable,
the
you
yeah.
I was just saying, guys, you know, you're too reasonable. Like, you know, it has to be Chad, otherwise it's just not gonna fly.
Mm-hmm.
Cadnomics. That's what they call
I
it.
know. It's hilarious. It's like it's like high school on drugs and Wall Street mashed together, moving very, very, very fast.
Definitely. Well, yeah, we're coming right up on the hour here. I definitely appreciate all you guys taking some time to talk. I think that we're in a really interesting territory where the next 2 to 3 months are probably going to make or break DeFi for a long time. So hopefully all of us are on the right side of it. But I appreciate you guys being your perspectives and looking forward to watch all of your projects grow. I think that everyone on the panel here is something really early stage that has a lot of potential. So definitely rooting for all of you guys to do some cool stuff.
Thank you, Cooper.
Thanks, Cooper.
Thanks, guys.
Here, guys.
Thank you so much, guys.
Ciao. Take care. Bye-bye.
See you.